expense deductions. Like if you have a property management company, I mean, not everybody missed this, but property management fees, that's one.
Mhm.
Um, Educational expenses. Just say, for example, you have a partnership and they go in it, and one recognizes they can make a career out of it. So they can go back to school and take advantage of the lifetime learning credit if they become a property manager or to further their education in real estate.
Welcome to Your Real Talk, the podcast where we get to talk about what's real for you. I'm your host, Luna Petty. I'm a seasoned entrepreneur, a licensed tax advisor, and a California real estate and mortgage broker. On this podcast, we get to talk to industry experts about information and advice that's going to help you in your real estate investment journey. So whether you're a buyer or you're a seller, we have something here for you. Today, we get to talk to tax strategist Keforie Dhie about his information and advice that he has for real estate investors. Welcome to the show.
Thank you for having me. Good morning.
Good morning. Good morning. So, give us some background about you. Tell us about yourself, where you came from, and how you ended up here as a tax strategist.
Oh, goodness, that's a journey. Let's see if I can not keep you waiting. Okay, so I'm originally from here, Los Angeles, California. How I got into being a tax advisor, well, it started a long time ago. Had many jobs, was a certified system engineer, computer tech, worked for the school district. So I kind of worked in a lot of spaces. Okay. One of the companies I had started when I was at the school district, actually, I got laid off from the school district. When I was leaving, I started a company. I took my last bit of money and I went down and I filed a DBA and started a commercial cleaning company. We're talking about 2010, I think it was 2010, 2011. And from then, I began to like walk door to door, print out little flyers and walk door to door and try to start my commercial cleaning business. It took a while, um,
Mhm.
but eventually I closed in clients. One of my clients was a well-known tax company. Can't name them, but they're well recognized. And I learned a lot from them, the connections, the branch managers, and eventually it was suggested that I take the class, and become a tax preparer. Did that. Um, Realized my niche was business startup since I had so many experiences in different fields. So studied tax code, understand how to do that. So if there's anybody, regardless of what it is that you're looking to start, like I said, start, I can guide you through it from the DBA to sole proprietorship or even how to even incorporate. So that's how I kind of got off into it and been doing it for like about 7 years now.
Okay,
And
nice.
I'm virtual. My tax clients is very easy for me. What they can do is upload their documents. We meet virtually. Wherever there's a smartphone and signal, uh, their taxes is covered. I got them.
Got it. So you work with a lot of real estate investors. Tell us
Yes.
what are the common misconceptions that the real estate investors have about real estate investing and taxes?
Well, one is that they're all taxed the same. It really depends on how you're organized. So if you go at it at a sole proprietor, it's going to be different than it is if you come in as an LLC, whether it's a single member or multi-member LLC. So the taxation is different.
Mhm.
Um, Another misconception is I think I don't know. I think that's pretty much it. The taxation, the capital gains tax, once they
Okay.
sell it, how that comes into play. Like I said, it's a difference between how you're set up. Um, but there's ways around that. It takes tax planning to avoid capital gains. Well, not avoid it, but to should I put this? How to defer capital gains. There's
Yeah,
strategies for that.
absolutely. Okay. I have a lot of clients who come to me to get pre-approved and they hear somebody talk online or they went to some seminar and at the seminar they told them if you're going to invest in real estate, you need to hold your properties in an LLC. And initially for me, as the loan lady, I'm like, those loans are not that easy to get. They sometimes require higher down payments, and they have other various requirements. So tell me, as on the tax side, what are the benefits for investors holding properties in LLCs? Why is that so popular?
Well, let's see. To hold them in an LLC, it's well, if you hold your property over a year and when you sell it, you qualify for long-term capital gains, okay,
Okay.
which is lower than short-term capital gains. That's one advantage. I'm sorry. Would you ask that question again, please? I'm
Sure,
sorry.
yeah. So the background is I have a lot of clients who come to me and they want to purchase properties and they ask me to put them in the name of the LLC.
Oh, yes.
Because it's usually because they heard it at some seminar or somewhere online. So I was curious as to if you can share with the audience what are the tax advantages for holding real estate investments in an LLC?
The capital gains,
Okay.
the long-term capital gains, if you hold it over a year. Also, the depreciation. Commercial property can be depreciated over 39 years. Residential, I think it's 27 years and 6 months. You're able to deduct $10,000. So it's a deduction as well. Um, those are the two I can think of off the top of my head, and also the 1031 exchange.
Okay.
So that's the tax deferral strategy. And I haven't talked about the Section 453, which is the installment sale, but that's just another way of deferring capital gains. And there's one more too, but I can't think off the top of my head. But those are the ones that come off the top.
Okay. Does the estate planning come into a factor at all when you're holding a property in an LLC?
Yes,
How so?
yes. Well, you need to have successors. If you pass away, someone has to take it over.
Mm-hmm.
So yeah, that comes into play. Because if you have partners, yeah, that's about it. I'm sorry, but yeah.
Yeah, okay. As a licensed tax advisor myself, I see people come in with LLCs that are single member LLCs. I'm sure you see that as well. So how does the treatment differ from a single member LLC for real estate withholdings as opposed to a multi-member LLC?
Okay, for single member LLCs, it's looked at as a pass-through entity, a disregarded entity. So the income goes directly to the person's income tax, their personal, so they get taxed personally. Multi, well, that it's goes through it's recognized. The income is recognized, and depending on the partner's allocation, that's how much they split the profits is where they pay taxes on it. So according to their rate, according to income and their tax rate is how they pay on that. So there's a
Mm-hmm.
difference in taxation.
Okay. So it sounds like if I'm a single member LLC and that income is going to get passed to me, am I benefiting from holding that property in the LLC if I'm a single member?
Yes, there's
I'm still
benefits. You can use
benefiting?
yeah, you can use the tax deductions. Um, I want to take a look at the situation, but yeah, there's tax deductions that you can use. Um, there's oh my God, that's so much, but the deductions. But yes, um, I'm
Okay.
sorry.
No, it's okay. It's okay. I understand. So on the multi-member LLC, you said that the money passes through and goes
Well,
through
it's
the other.
being recognized. It's being recognized, and it'll pass through to the partners. It's being split up for the partners depending on how they receive the split the profits, the proceeds.
What would be the benefit of doing it that way for real estate investors, partners that are, why would they hold it in the name of an LLC instead of as individuals, for example?
Oh, because it's limited liability for one. Second, it's image. People don't want to give people money. You can raise money in the LLC. It looks more professional. Um, there's let's see, like I said, the qualified business income can come into play. Long-term capital gains. There's a lot of deductions that's available that they want to take
Mm-hmm.
advantage of.
Okay. So give me an example of some of the tax deductions that real estate investors often overlook or forget about.
Okay, let's see. I would say expense deductions. Like if you have a property management company, I mean, not everybody missed this, but property management fees. That's one.
Mhm.
Um, Educational expenses. Just say, for example, you have a partnership and they go in it, and one recognizes they can make a career out of it. So they can go back to school and take advantage of the lifetime learning credit if they become a property manager or to further their education in real estate. That's
Mhm.
the advantage. That's overlooked. I mean, it helps. Improvements on the property, solar, um, trade fixtures, anything that'll make the property valuable. That's something to take into consideration. That helps. Yeah, it's just about the ones I can think of off the top of my head.
Okay, good to know. So that gives us what they overlook. So I've seen in situations on the loan side, again, wearing my loan hat, where the buyer or the seller is involved in a 1031 exchange. Can you explain what a 1031 exchange is to real estate investors and why it's an advantage?
Well, 1031 exchange, it's when you sell your property. Well, the advantage is deferring capital gains.
Okay.
So 1031, so how it works is you sell your property and you have 180 days to replace that property. So after you sell your property, you have like 45 days to identify replacement property. So once you identify the replacement property, you have, or you can identify up to 3 replacement properties. It doesn't have to be on the same value. It could be, but it has to be properties that intend to close. So after you sell the property and you identified your replacement property, you have 180 days to to buy that property. So one of those 3 properties, just say for example, you identify 3. One of those 3 properties have to close in that 180 days in order
Mm,
for you to qualify for that tax deferral strategy.
got it. Okay.
So it's a tax advantage strategy for investors.
So who would be a good candidate for that type of transaction?
Well, let's see. We mean by investors, or can
Yes.
you? Actually, it could be multiple investors or single investors. That's a good investment strategy. Yeah,
Can an LLC, single member or multi-member also complete a 1031 exchange?
I believe they can. I believe they can. That I am unsure, but I think they can.
Okay, good to know. So what are the strategies that real estate investors can use to minimize their tax liability?
Oh, take advantage of the deductions. Like I said, mm, look for tax incentives that they have for improving their property. That still falls into deductions. 1031 exchange, pretty much everything I named earlier is what they can utilize.
Okay. Are there tax implications for withdrawing profits from their LLC that if they hold the real estate?
Well, if it's been taxed the first time, no.
Okay. And if
So,
it has not, so if I am a member of an LLC, can I say, well, this real estate investment earns $1,000 cash flow every month. We are going to pay that out to the partners every month. And does that change my tax strategy at the end of the year?
hmm, um, very good question. Very good question. I believe it does. So the thing is, you haven't paid taxes on it yet, right?
Correct.
In this scenario, so you
Correct.
would have to pay taxes on it. But if you did pay taxes on it, you won't have to once you
Okay.
pay taxes on it on the first time.
Okay.
Did I answer the question?
I think that did. So it sounds like you're saying that there are tax implications for withdrawing
Sure.
profits from the LLC that holds real estate
If you haven't
if you
paid taxes
haven't
on
yet
it,
paid taxes on that
but if you
income.
have, then you don't.
Okay, got it. Are there any strategies for withdrawing profits that real estate investors would need to know?
Um, to be honest with you, I can't think of any. At
Okay,
least not off the top of my head right now.
got it.
I would have to listen to the situation and probably do a little homework. But right off the top of my head, I don't have an answer for that.
Okay, got it. Not a problem. So can you explain how losses from real estate investments can affect the overall tax liability when using an LLC? Because not every property that we invest in is going to have a profit, right? A lot
Right.
of the times these properties have a loss. Either they're an annual loss that we expect, or maybe something happened and there was a large repair and there's a loss in that property. So how does that weigh into the tax strategy?
What that does, the losses can be carried forward.
Okay.
So you can use those to offset the income, which would offset the tax liability. And you can, like I said, use the losses and carry them forward for future reduction against your income because of that.
Okay. What does that carry forward mean for the person that's just listening and they're, not done it before? What does that look like, or what does that mean? How can you explain that and kind of like break it down in layman's terms?
Okay. Let's say, for example, $100,000, just to keep it simple, um, is what you made for the year. You took a loss of $200,000. Okay, so you're negative. The next year you make 2,000, 200, $100,000, and you're still at 100,000 that you still, could carry forward. It's similar to that. Maybe that's a crude example, but that's kind of like the idea of it. So you take your losses and you can carry them forward and use it against your income for that year, which will reduce your taxable income, reduce how much you would owe. In addition to expense deductions, that could help an investor as far as not being in trouble with the IRS, far as the bottom line in income. Yeah, that's not a good thing.
So if I hearing you correctly, it sounds like if I have a loss on a rental property and I have this in an LLC entity, or is it also true for individuals?
It's true for individuals as well. You can carry the loss forward.
Okay. So let's say I have a property this year and I needed a new roof. So I had a $20,000 unexpected repair, or actually that's an improvement, right?
That's an improvement.
Okay.
You can use that as a deduction.
Okay, perfect. So I have a improvement and I'm using that as a deduction. So on this year on my taxes, I have a loss on this property of $10,000,
Okay.
let's say. So let's say I make $100,000 a year. My tax liability is, throwing out round numbers, $5,000.
Okay.
Okay. So am I allowed to now subtract my $10,000 real estate investment loss from my $5,000 income tax liability from my W-2 job?
Yeah. Well, good question. Yeah, I think you can. Yeah.
Okay.
That you got me with that one because we threw in a job. We was talking about LLC.
Oh,
I know
yeah, that's true. I did
for your
ask you.
income. I know that was a good one. But you can subtract it from your income, yes, theoretically.
Okay.
In theory. Now, as far as job goes, I think that plays into how much income is brought in, but I would have to actually work the numbers to see how that is, but I think you can. There's a way to do that, but it's separate from this scenario. We're talking about commercial real estate, but it can reduce your tax liability. That can be done.
Okay. Good to know. Good to know. So Corey, what else do you do in terms of reaching outreach? I know you do, you're a tax strategist and most of your business is online and people can reach out to you and get their taxes done virtually. Where else would they be able to find you, find more information about you, gain more information and insight, all of that?
Okay, I'm putting together some courses on Skillshare. Are you familiar with Skillshare?
I am, but for some of the people in the audience who are not, can you
Skillshare
explain what that is?
Skillshare is a place where you go to learn. Skillshare.com. You subscription. I don't work for them, but you subscribe and you're able to learn pretty much anything, from marketing, anything. So what I'm going to do, I'm posting courses. This is one of the courses that we're talking about. I have an ebook uh, for the information that we talked about. There's going to be on Skillshare, which is when vision meets opportunity, and it talks about the Q&A that Miss Petty and I had described in detail. So that's going to be on there. People could take that course. And my ebooks, they're hypertext. So that means you can click the images and you can come directly to me. You can get on my schedule page. You can connect to my LinkedIn page, Instagram page. You can find me. Or you can just Google Keforie Dhie or my tax guy Keforie, and it'll point you in the direction of finding me. Um, Very easy to find. One thing I'd like to say for everyone that's listening, My niche is to help people take their side hustle and transforming it into a business. So if you at a point in your life to where you like kind of feel like down and you kind of fed up, with the employment struggle of trying to find a job, think about what it is that you're passionate about. That's something you're going to show up every day to do. And the simple thing to do is, you can start off as a sole proprietor, which is getting paid off your Social Security. Use your Social Security and whatever profits that you make, you report that in. Now, a lot of people run from that because they're thinking that they're going to run out and make $20,000 in the first year. Not exactly, but still, if you do have a job, whatever it is, dog groomer, I don't know, you can make extra money on the side, and whatever expenses come into play, whether educational expenses, whether it's equipment, and can count against your taxes, same as the real estate. So once again, my name is Keforie Dhie. If need be, please reach out to Ms. Luna Petty. And I'll be more than happy to help you. Tax support is just a video call away from me. So no mask, no standing in line, no traffic. As long as you have a smartphone and the signal, I got you.
There we go. All right. Thank you so much for your time. I appreciate it. Thanks for sharing your insights.
Thank
And
you very
I think
much.
everybody listening is going to be able to get something out of the information that you just gave. So we appreciate it.
Also, I would like to, if you could,
Yeah.
send you the ebook that I'm
Okay.
talking about. And that way your listeners can download that in the description. It's going to be formatted for mobile devices so they can read it. And like I said, click any picture or whatever, we can talk.
Absolutely. So I will have a link for your ebook in the property description, and they can find you everywhere online just by Googling your name. You have yourself out there in a lot of different avenues, a lot of different sites. So easy to find if you're looking for the tax strategist that is going to help you navigate from from being a conceptual business to building that business. Sounds good.
Yes. Oh, yes.
Awesome. Thank you so much. I appreciate you.
Thank you very much for having me. Thank you.
My pleasure.